The feds are not being honest with us. So we got the reports back in June that, in May they said they're going to start the quantitative easing or quantitative tightening in June, right? And so they said they were going to offload $30 billion a month in treasuries and $17 billion a month. I thought it was 35, but $17 billion a month in mortgage-backed securities. Well, the numbers came in, and actually June's numbers for the mortgage-backed securities rose $3 billion. So what does that mean? And they also fell only $10 billion in the Treasury holdings. So if the mortgage-backed securities actually rose $3 billion, what that means is they're actually still propping up the market. They're actually still quantitative easing. They're still buying mortgage-backed securities, which is keeping the rates artificially low. So if they actually do start selling, which I'm not sure a lot of people are buying, a lot of investors are buying these because, it's 2.5, it's 3% return. Now, I do see a lot of investors jumping into the bond market and buying some of these just to preserve their wealth. So if you have $1 million, you can't just go put it in the bank. You have to find a place for it to preserve your capital, right? So what they're doing is they're putting it into bonds, and that's driving interest rates down a little bit. But once they stop buying, it's going to start going back up. And if the feds actually start selling off their mortgage-backed securities instead of actually buying them, because they're still buying. They didn't just shut off the spigot, they're still buying if their balance sheet rose $3 billion in June. So that's probably why we haven't seen mortgage rates shoot to 7 or 8% yet, and why we haven't seen housing prices just come tumbling down. We are seeing a little bit of housing closed prices come down, maybe 1.5% in some areas in the Phoenix area, Maricopa County, right? We're seeing a lot more inventory, like 1,000 homes a week come to inventory. And I guess, the 200 people a day moving here, their sentiment is not to buy a house right now. We're still selling maybe 8,500 homes a month probably, but we were up at around 10,000 homes a month, 11,000 homes a month, and that's slowing down tremendously here in Maricopa County, Phoenix, Arizona. But what I am seeing are massive price cuts. So I've been following this house in Surprise. This is a pretty newer built home. It has an RV garage and a one-car garage, and it's a pretty nice home with no pool. I prefer a pool myself. It's easier to keep cool here in the 110, 120 degree heat during the summer. It's highly desirable to have a pool here in Arizona, unless you don't like keeping the maintenance up on it. But this home started out around $6.25, and now it's down to around $530. So that's a $90,000 price cut in just what? I think it's 44 days. Look, it has like 101 saves on it. That's a lot of saves. I see some houses with only a dozen saves after 90 days. It's incredible. And I see some homes like this one here in Arrowhead Lakes. It has not been cut once. Look at how many days on the market this has. Oh my goodness. So I'm also following the second home market, like up in Munns Park. This is northern Arizona, up in the Pines, where it's 20 degrees cooler. It's just a great place to get away. And there's not a lot of shops within, 10, 20 miles. So it's just a real quiet, woodsy area. And now this particular house, I thought, wow, this is fantastic. Has an amazing deck. It's an A-frame home, 1,500 square feet. And they took it off the market after only 30 days. They bought it in 2021, and look what they paid for it. Wow. And then they put it up for like $795 or something, and they took it off the market, and now they're asking $3,500 a month for rent. I'm not sure who's going to pay $3,500 a month for 1,500 square feet. I don't even have a garage. Come on. So I'm also seeing probably about a 10% decline up in the area we sold in Flagstaff, which is huge. Like 50 million visitors a month go to Flagstaff for the Grand Canyon. You have parents going for NAU, which is a major college up there. You have just a lot of tourist attractions. People come from all over the country, all over the world to go to Flagstaff for, I mean, it's one of the 7 wonders of the world, the Grand Canyon, fantastic place. So what I'm also seeing, what I want to address are desperate posts by people in my industry, both loan officers and real estate agents. I'm seeing marry the house, date the rate. So I don't really get that, because if you marry the house, you're marrying the price you pay. And if there's a potential that it could decline, house prices could decline by 10% over the next, 12 months, 10%, let's say on a $600,000 home, that's $60,000. From the peak, I think we will see probably a 15 to 20% drop. Maybe that takes 2 years to go there. But if I marry the house now, and I could save 10% later, that means that to me, that's not a good deal. In 12 months, if I lose 10% of the value, and say I'm only putting down 3%, or I'm doing, some kind of, 3 or 5%, well, now I'm underwater. And say I take one of these 2-1 buy downs, or one of these ARMs, fixed for 5 years. How do I know that the housing market will be, my value will be higher and I'll be able to refinance out of that? How do I know in a 2-1 buy down, each year your rate goes up? So the first year, say you get a 4.5, the next year it goes up to 5.5, and then the next year it goes up to 6.5, and that's where it stays, right? Well, how do I know that I'm not going to be upside down in my house with a recession? We're definitely in a recession right now. How do I know that I'm going to be able to refinance out of that 6.5%? These are desperate, greedy attempts to try and get you to buy a house now. The new builders are going to roll this out. A lot of loan officers are rolling this out. I'm not doing it. I mean, unless you say, yeah, I want this. I want an ARM, you better know what you're doing, and you better have a good idea of what's going to happen in the next 5 years, in the next 2 years, in the next 3 years. Where will the housing market be? Nobody has a crystal ball. So if you're buying into one of these 2-1 buy downs or one of these ARMs, I know our business is 100% commission. So you have to take that with a grain of salt on who's giving you guidance in the real estate industry. I'm not a financial advisor. I'm just a guy playing guitar over here, just studying the markets to the best of my ability. I do have over 18 years in the housing industry as a mortgage professional, and I seem to be able to time the market pretty well. And I'm not a huge hitter. I'm not a multimillionaire. I'm not a big, duplex, fourplex investor. I'm just a guy that flips a home here or there and has, a couple of streams of income outside of what I do. And so I just want you to be aware that these posts seem very desperate to me. If you can't get a 30-year fixed or a 15-year fixed that fits in your budget with the purchase price of the house, you're not making a strong enough offer on the house. So instead of getting a 2-1 buy down, why don't you go in there and offer 10% less than the asking price and see who needs to sell, or see who's looking for a sucker, right? Maybe you make just plenty of money and you don't really care, and you're going to live there for 10 years. And in 10 years, you're probably going to be okay. When we bought our home for $360, well, a couple years later, the neighbor sold, and she short sold for $280. But she was pretty much the only one in the entire subdivision that sold for that low. Everything else went for about what we bought for in 2007 during the crash. So we slowly saw it go up to 375 and 400 and 450. Then all of a sudden it exploded to these unrealistic numbers for these families. So I just want also to touch base with you on what's happening in California with the truck driving situation. So California is trying to get you to, in 2 weeks, that if you are an independent operator, like you own your own truck, that you're no longer allowed to operate in California. Now, a lot of our goods come from the Long Beach, ships that come in. That's where a lot of our goods come from. And that's how we get here in Arizona a lot of our goods. Maybe 70% of our goods come from trucks. And so what's that going to mean? We're going to lose about 70,000 truck drivers that are independently operated. Now we're already about 80,000 drivers short, and with the gas crunch going on, and then this happening, not allowed to operate in California, you know what? That's just one more reason not to patronize anything in California. It just so you don't help them with their taxes and their government. Their government is just so messed up over there, where you can walk into a Walgreens and steal like $1,000 worth of stuff and not go to jail. You can poop in the streets. You can shoot heroin in the streets, but you're going to get a $1,500 fine for parking in your own driveway. California is just so messed up, and they want to charge drivers per mile tax. Per mile tax. Can you imagine? That is just one more reason to vote on the red wave coming up. I'm just saying that is just absolutely messed up. Whatever's going on in this woke society is just absolutely pathetic. I want you to know you need to be stocking up on food big time. We're going to see in about 8 weeks this fall, we're going to see a 20 to 40% increase in the price of food. I'm not even kidding. The DEF fluid, the food, the gas, the inflation, we're just getting this party started. And if you don't take this warning seriously, you're going to find yourself in a situation. Stock up on food, stock up on water, get a generator. Look at what just happened on Friday in Canada, where their entire grid shut down as far as banking and internet goes. And it's ironic that they did a test run if we got cyber hacked on our grid just last year, just like they did a simulation for the Rona, right? They did a simulation in 2019, and all of a sudden 2020, bam, bam, they're locking everybody down, which was unnecessary. It's a power grab completely. So in Canada on Friday, you couldn't withdraw out of ATMs, the credit card machines were all shut down, the internet was shut down, this Rogers network completely shut down. Nobody could get money out. Nobody. So I highly suggest not only the food, but keep enough cash on hand to last for 30 days. I'm not saying go pull all your money out of the bank. I'm saying just have enough money to last yourself for 30 days in case they start doing these power grid outages. I hope you find this video educational. I hope you take my warning, and I'm not a financial advisor. This is just my opinion. It doesn't represent the views of my company or anybody else in my company. That's my disclaimer here. I'm just a guy studying the markets, over 18 years in the mortgage business, playing guitar on my spare time, driving cars and having fun. Love to be a dad, love to be a father, but at the end of the day, just trying to keep it real with you guys. Thanks for watching. Until next time.